Well, let's take a look at how our grain markets are holding up here during this hour, and let's take a closer look at that corn market in Chicago. We had the corn kind of holding its own overnight, but then it drifted lower after the open. And so we currently have the March corn down 1 1.25 pennies. It is now trading at 3.50 3/4. We have July down 1 1.25 pennies at 3.67 3/4. Extremely slow trade in the corn, but that's typical for this time of year. Now on the soybean trade, this is a little more intriguing here. We had some firmness overnight. We were up several cents. We opened several cents higher. We were about 3 to 4 higher on the open. Then we turned around and went lower by about 3 cents a short time ago. Now we have March soybeans kind of caught in the middle, and we're just 1 tick lower, 1/4 cent lower at 9.84 per bushel. And now you have the July down a half at 10.05 1/4. And let's look at the wheat trade. On the wheat in Chicago, we have that March contract now trading at 4.22 1/4. That's down 3.5 cents. The pressure continuing here today. And July down 3 1/4 at 4.48 3/4. Kansas City wheat, we have the March contract there trading at 4.24 1/4. That is now down 4 1/4. July down 4 1/4. And in Minneapolis wheat, we have the March contract currently trading at 6.06 3/4, down 1/4 cent. However, July up a half at 6.24. Cotton trade, we have the March contract on the cotton now 45 lower at 82.96 cents per pound, so it's drifted below 83 cents. Let's go to the trading floor in Chicago and visit with none other than Mr. Todd Bubba Horwitz of BubbaTrading.com. He joins us right now. Good day, sir. What's going on in the grain trade here? A little choppiness.
Good morning, Marlon. Well, we were a little bit reversed yesterday. Wheat was a little bit higher and soybeans were a little bit lower, and the whole mess. But in the meantime, soybeans failed right where they should have failed, which is 9.85. Now the real question is whether they can get above 9.85, hold there. Then I think we go higher. But this is the area we've been watching. We talked about it almost every week for about the last 3 or 4 weeks. 9.85 is the key spot. If we can get above here and hold, we look to go higher. Corn and wheat, we're just lollygagging around here. I'm a buyer. I'm looking for spots to buy in every dip. I think we see a much bigger move. I think you've got too many commercials trying to push these down. There's not enough outside interest. I think eventually what will happen is you'll see a little bit of a short squeeze, and you'll see these markets start to take off to the upside.
Well, we've had so much talk about conditions in central Argentina where it's been dry. They missed out on the rain, and that seemed to have really propped up the soy meal market. However, today the soybeans opened higher, but soy meal was lower on the open. Was that telling you anything?
Well, it just tells me that everybody's trying to figure out a reason to trade these markets, and there's not really much to do. That's the whole key here, is there isn't a lot to do. We've got light volume, very light volatility, and everybody's looking for a story. And there is no story. The money tells you a story. The commercials are keeping a cap on these right now. 9.85 in soybeans is a key level. And other than that, we have to see what's going to happen as we get closer and as we come out. I mean, we're not hearing anything about wheat either. It's, wheat's okay. It's even though there's no snow cover, it's okay. Well, we'll see. I think it'd probably be a little higher prices. Now, I'd be looking to be a buyer pretty much across the board.
Yeah, with that in mind, we're talking about the wheat and the fact that Amarillo, my goodness, I've had several people tell me they haven't had significant rain in over 100 days now. It's hard to keep that wheat surviving under conditions like that, and it's going to be in the 70s again. Winds will be picking up later this week. What about the abandonment of acres and maybe shifting over to cotton or something this spring? Nobody seems to be looking at that right now, Todd.
But the wheat is dormant. It doesn't know. Look, at the end of the day, there's going to have to be something done, and this is going to be a problem. Just the easy example is your grass. If there's no snow cover, there's no moisture, your grass is terrible, and it doesn't grow back in the spring. This is going to be the same problem that we have here in wheat, and they're either going to have to abandon and do something else, or we're going to have to get some moisture pretty quick here. We're getting to that point where I don't understand why wheat is hanging down at these real low prices, because at the end of the day, this is going to be a problem, but nobody wants to recognize it, and that goes back to the lack of volatility and the lack of outside money coming into these markets.
And you've been talking about this quite a while, that you had considered wheat to be maybe a dark horse out there. So one to watch, that's for sure. All right, Todd, I'll bring you back here in a moment, and we will see what's going on in this cattle market and the hog trade as well. A little bit of choppy market activity there on a Tuesday. We'll cover it when we come back. And now for a look at our livestock trade. Well, let's go ahead and dive into our live cattle futures, and we'll bring in some analysis shortly as well. On the live cattle trade, we have the nearby February contract quoted at 123.45. Remember, we posted a high early today of 124.10, so we're significantly off of that now. We are down a dime from our close yesterday. April down about a dime as well at 123.88. June down 17 at 115.38. Those are each about a $0.50 off their earlier high this morning. On the feeder cattle side, on the feeders, we have the March contract 27 lower at 145.55, and April down 36 right now. Last trade 146.12 per hundredweight. Let's stop right there and see what's on the mind of Todd Bubba Horwitz when it comes to the action we're seeing in the cattle market this morning. What's up?
Well, Marlon, I'll tell you, I think that the fat cattle, if you're a trader, this is not long-term. If you're a trader, you're probably in a pretty good spot to sell them, to pick up a couple of bucks to the downside. But, you know, longer term, I'm very bullish right here, at least through April. So I think that I'd like to see a pullback so I can buy. If you're a trader, I would look to see a pullback. I think that print at 124 this morning was fine. I think that you're going to see probably down to about 121, which is where I'd like to step back in and buy them again. I think the feeders are showing you that they're building a nice little base. You know, after that big rally and then a big sell-off, now we're building a nice little base. I'd look to be a buyer of feeders somewhere around 144. I think those are really good, solid levels. And again, I'm looking for higher prices. But in the short term, I think the fats will probably sell off a little bit because, you know, we had that big rally. Was it Thursday or Friday last week where we went up limit that one day? So I think that'll come back in, and we'll look for another opportunity to buy them and watch them go up.
So you're looking at feeders being a buyer around 144. From your standpoint there, how much do you risk in a buy point like that?
Well, I mean, I think that I believe that'll be the bottom. So I'm very comfortable buying there. I mean, you know, if they go, I'd be worried if they went back below the low of 139, then I'd have to get out. But I mean, I don't think they're going down there. I think they continue to go higher. I think they had the big market and then they fell apart, and here they are holding up beautifully over the last couple of weeks. I think this is a great opportunity to step in.
Okay, now the lean hogs have been bumping their head on some overhand resistance for a while now. Right now you have your February just up a nickel at 71.85. That active April contract down 72 at 74.40. That's $1 and almost 20 cents off our earlier high this morning. So what's at work in the lean hog futures trade here when you look at the chart patterns, Todd?
Well, I think that 77 was the top in April. I think we're going to see 70. That's where I'm looking to get in at 70. And we're getting a little bit of mix up here right now, right? You got Feb, which is not as active now, but it's right around that 72, which was a key support level, or on the way up was a key resistance. So now we're coming back below. If Feb continues lower, I think the spread stays relatively tame, and I'm looking for Feb to get down to about 68 if it gets down that low. So I think we look for 70 in April and then look to be a buyer. I mean, I'm certainly not bearish a spot. I just think you need a little bit more work on the downside to create that upside momentum we're going to get, and I think that will tie in with, again, part of the equity sell-off that I think we're going to see as well.
So are you working under the bigger umbrella of some seasonal tendencies here in the meat markets?
Well, I am that as well, because I remember when I used to be on the truck with my father, but also I think the chart is screaming to be a buy, but it's telling me that it needs to sell off first, and that's what I'm looking to see, and I think that's what we're going to see. I'm not at all a buyer here. They go up from here, they'll go up without me, but I do expect, and I'm pretty confident we will see some pressure kick these markets down a little bit, and then it'll be a great stop to step in.
Well, thank you very much, Todd. Good to visit with you. Todd Bubba Horwitz happens to be with BubbaTrading.com, and he is located right there at the edge of the trading floor in Chicago. So interesting perspective from Mr. Horwitz.
As always. All right, thank you, Markets Editor Marlon Bull.